Welcome back to Startup Street. Kazam, a device-agnostic electric mobility software platform for charge point operators, fleet operators and electricity grids, has raised $3.6 million in a round led by Avaana Climate Fund. The company aims to build a one-stop e-mobility software platform digitizing the entire value chain from managing energy from grid to fueling an EV to managing a fleet. To elaborate on this, joining me now is Kazam's co-founder and CEO Akshay Shekhar. Akshay, welcome to Startup Street. Now, Kazam aims to become a one-stop e-mobility software platform, digitizing the entire value chain, like I mentioned, from buying of electricity to fueling an EV to usage of EV. So take me through your offerings and the pain point that you're solving.
Thanks, Shruti, for having me here today. So Kazam's vision actually is to be the data intelligence platform. So, today when we are just getting started off with EV, there is no data available in the market. And we have just taken the first step of digitizing these assets in the value chain, which is the fueling infrastructure and the vehicle in itself. And that has been our first 2 years growth story, right? The next phase typically for us is to allow the captured data to everyone in the value chain so that they can make different use cases. You can really think of us like how, an e-mobility gateway, like how you have payment gateways which allow everything to happen right from smaller players to the largest player in the ecosystem.
Okay. So Kazam enables EV charging and swapping operators to control, manage and analyze their fueling assets. Also, with the new expansion of the platform, Akshay, operators can generate revenue demand via Kazam's collaboration with multiple Tier 1 EV OEMs. Can you elaborate on this?
Sure. So I think the first phase, our first principle said that, fleets are the ones who will adopt to EV, especially the two-wheelers and the three-wheeler space had achieved the total cost of ownership. And this allowed us to get a lot of these vehicles onboarded onto our platform. The second thing that actually worked on our favor is, being an enterprise software company, it allowed us to create this word of mouth. And today we work with the top 3 largest two-wheeler manufacturers, and we're there inside their app, which allows us to actually divert these drivers to charge point operators. On the flip side, we have almost 25 to 30 odd charge point operators ranging from the largest oil and gas company in the country, and we can push these demand to them. And we make a small cut in between, essentially to allow driving utilization. The whole idea, again, for Kazam is to ride on the data intelligence that we are collecting from the market. And this demand generation will really help them help bring confidence in the market in terms of the utilization and profitability for these charge point operators.
Okay. You currently have over 7,000 charging points under management, and you also manage 150,000 kilowatt hour of electricity per month with 10% of contribution by international clients in the US, Europe and Asia Pacific. So Akshay, take me through the current business growth and revenue numbers.
Sure. So, I think last year when we started off, we were at, 10 megawatt of, 10 megawatt hour of charging that used to happen on our platform. And this has grown to almost like 15x in the last 1 year. And that's our growth journey. So it almost went to 150,000 kilowatt hour, which is 150 megawatt hour. And we also saw the number of charging stations and drivers grow almost 5x in the last 12 months. And, a lot of our software requirements started coming inbound internationally. And that's when we started really thinking that we should just really focusing and limiting ourselves when this whole software stack can be expanded globally. So with this new fund also, the whole idea is to expand the software base outside of India and create a go-to-market strategy for us in that space.
Okay, let's talk about the sector, Akshay. The global EV charging infrastructure market is expected to be $27.7 billion by 2025. So how do you plan to capitalize on the growing demand for EVs, and what kind of partnerships, both with the government and the private stations, have you built so far?
Sure. So, as I said, the first principle said, get hold of the fleet guys, because they are actually driving utilization, right? So we got hold of the largest, organized segment in the third-party logistics players. We have very large, e-commerce players that work with us, the top 3 who work with us, and we help them digitize that whole charging infrastructure piece for them. This led to a network effect, essentially. And that allowed, players like the utilities companies in the Delhi city, the 3 utility companies of Tata Power, BSES, Rajdhani, and Yamuna, they work with us and, to get data for the whole city and also enable each consumer of electricity to own a charging station today. The other thing that actually worked in our favor is this network effect got pushed to the vehicle manufacturers. And today, I think we're in a very good position because in fintech, the bank is always in the center. And if you have the bank working with you, then you can really take this to the next level. And when you have vehicle OEMs, and specifically the tier one vehicle OEMs working with you, then your growth story has actually started off.
Okay.
Because you can bundle and you can reach to the last touch point because they already have the distribution network available with them.
Sure. Akshay, let's quickly talk about your recent fundraise of $3.6 million. You plan to use the funds to invest in technology and product teams. So if you could elaborate on these plans, what new offerings are there in the pipeline, and are you looking to hire across geographies?
Sure. So, the first phase, for any platform like ours, there is a supply side and there is a demand side, right? In the last 2 years, what we did was we only digitized the supply side, which is the charging infrastructure and the vehicles, and we got them onto the platform. The next phase for us is to, use this collected data that we have and give it in the value system. So we are now going to, come up with a grid management software, which can be used by utility companies so that they can start, doing load balancing, dynamic load balancing across the day. They can also do time of day scheduling for not ensuring that they don't have to put new power plants on the map in the near future. The other offering that we want to do is we want to get into the carbon accounting platform. So because we are already knowing what kind of electricity and which vehicle is getting charged, it becomes very easy for us to expand these APIs and allow carbon trading platforms to use this on the background. So these are the two major focus areas that we want to put in the next 12 to 18 months in building out these products and ensuring that whatever we've done on the supply side can now switch over to the demand side, and we're ready for it. The other small part in terms of hiring, right? We're very concentrated in terms of tech. We're very concentrated in the Bangalore region. But yes, the sales and marketing team is where, we have expanded. We currently operate in Pune and Delhi, and we look to get into other geographies in India. Obviously, the international market will remain remote because sales can happen majorly around remotely from here in India.
All right. Akshay, we'll have to wrap up our conversation, but many thanks for joining us on Startup Street and wish you the very best in your whole aim to democratize access to EV. Once again, many thanks for joining us today.
Thank you, Shruti. Bye-bye.
Early stage VC fund 314 Capital has raised $200 million, or about 1,600 crores, for its fourth fund, which will continue its early stage venture capital strategy. The fund was oversubscribed in 2.5 months, and 90% of the fund is raised from institutional investors. Now, this is the sixth fund raised by 314 Capital, and it also marks its debut at GIFT IFSC and its first offshore vehicle. So joining me now to talk about the firm's investment strategy and a whole lot more is its founding partner and chief investment officer, Pranav Pai. Pranav, thank you very much for your time here on CNBC-TV18 and welcome to Startup Street. If you could start by telling us about this fourth fund that you've closed. Was it challenging raising this amount of money in the current environment? And, it's interesting you say that the fund was oversubscribed to about 250 million. Why did you decide to limit the size, and were you worried it could remain under-deployed?
Yeah, thanks, Ritu. Great to be here. I think definitely challenging, given what you're seeing, of course, in the headlines. It's a challenging time for the markets almost across the world. But what we're seeing now is very clearly three trends in the private markets. One, if you're an investor, a VC fund that has consistent performance over 7, 8, 10, maybe decades as well, that's very important to LPs. That's very important to global allocators. And the fact that you are able to maintain discipline through tough times and good times is now being evaluated much more closely. So I believe we've been able to demonstrate a lot of that. I'm also, of course, happy to say India is in a very different mood compared to the rest of the world. There's much more optimism in India. There's a turning optimism about India and the rest of the world. That's also obviously helped in showing the asset class in a different light, but definitely challenging. And the one reason why we had to say no to more capital is because the same thing I explained before, that discipline, that performance, that's what's helped us stay ahead of the pack. That's what has helped us differentiate. So unfortunately, we had to say no to more capital to keep disciplined on our fund size and our strategy.
All right, Pranav, so in this disciplined investment strategy that you have, you've already had the first close in March itself, and there are about 5 deals which are in the pipeline, approved or invested in. If you could tell us about these, and in total, how many companies will you invest in through this fund, and what is the average check size looking like?
Definitely, and what I must say is, now, like I said before, it's a lean time, but what we're seeing is a fundamental change in the market, especially in India, for the better. We're seeing more experienced founders with domain experience. They've seen scale before. Some of them have worked in startups that have gone IPO already. They've hired teams in the hundreds many times. So we're seeing now founders with much more experience and therefore much more respect and frugality in their mind when it comes to raising capital. So with the new fund, I'm happy to say we don't need to dilute our discipline in the early stage. We'll focus on investing in 30 to 35 companies. We typically invest anywhere between $500,000 to $5 million, so roughly 3 to 4 crores to 25, 30 crores. And of course, we are hoping that we will continue to invest in all of our sectors of interest: consumer internet, SaaS, fintech, enterprise automation, and newer areas like digital health and climate tech.
Pranav, there's also a lot of dry powder among VCs who are adopting this risk-averse approach. And, you're one of the Indian funds that has announced this fund close. We had several others as well this week, in the last 2 weeks alone. How are you changing your strategy as well because of the concerns emanating on corporate governance and so on? How are you protecting your investments? And are there some sectors you would not touch with a barge pole, for instance?
Yeah, great question. And risk management is something we take very seriously. In fact, we consider ourselves less investors and more portfolio managers in that sense. We have to work very closely with our founding teams in helping them build great businesses year after year after year. And of course, since we're 8-year, 9-year, 10-year products as a VC fund, unfortunately, with such a large time frame, we have to assume we'll have, maybe hopefully, if we're lucky, a couple of good years. But of course, on the downside, some recessions and corrections as well. So the job description for us as VCs is to build a consistently compounding asset, and hopefully many of them over time. And therefore, working with the founding teams, working with them post-investment on finance, on regulation, on filings, on of course, recruitment, and hopefully a couple of IPOs over that time frame. That's unfortunately now a given in our industry. So a lot of work post-investment, and therefore a lot of work on avoiding certain markets that don't give us large outcomes within that 10-year time frame. So we're not investing, unfortunately, in some areas like crypto. We're not investing a lot of the consumer internet models that are no longer viable given new realities. So yes, we will be consistently excluding some areas, but I'm happy to say many more interesting companies to build.
Well, if you could give us a sense of what kind of average returns 314 has generated for investors previously, and also what's the pipeline in terms of exits? Are they getting delayed because of the current environment, or do you have something in the pipeline, say, for this year?
Yeah, I'm happy to share. Again, we think in these decadal time frames. So one good year, one bad year, hopefully some acceleration, some deceleration. But over that time frame, we've been fairly consistent so far. We finished almost 17 to 18 exits. We have almost half a dozen in process as we speak. We finished our first IPO last year with traction going live on the market. Fantastic experience. We hope at least 3 or 4 more of our companies who are on the IPO planning path will start showing seriousness towards that process from next year. So definitely a lot of exit planning is live in 314 as we speak. But in spite of market sentiments, I must say, M&As are happening quietly, follow-on rounds are happening quietly. We're seeing significant interest in secondary exits when we need to. So I'm not too concerned about what we're going through right now. Certainly our trajectories for our exit horizons for our older funds are definitely on track.
Well, we'll see how that plays out. But Pranav, thank you very much for your time here on CNBC-TV18. It was a pleasure speaking with you.
Thank you, Ritu. Appreciate it.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.